I'd like to welcome you to my overview of the Federal Milk Marketing Order 33 update. This is Dr. Lawrence Jones from FARME Institute, and I would really like to thank Nobis Agri Science for supporting this podcast. For each month, USDA releases 3 reports to summarize the production. Normally, it's the milk production report followed by the cold storage report around the 22nd or 23rd of the month. And then finally, we get the dairy products report, the first week of the following month. So for each month, I calculate what I call a trend estimate. And that is just, based on history, this is where I would think it should come in. That doesn't make it right or wrong. It just means that's kind of where it's been. I usually try to throw in the estimates that StoneX publicizes, and then we get the actual numbers. So if we start with the milk production report, really there was nothing remarkable. Cow numbers came in at 9.3 million, milk per cow was 64.77, and milk production was about 18.8 billion pounds. The cold storage report showed that we increased stocks by 22.8 million pounds of cheese and ended up at an ending stock about 1.4 billion pounds of cheese. Compared to what I thought should happen in a typical December where we should have taken away a bit of cheese, we actually added a bit of cheese. So then we got the production report of cheese. We had 1.15 billion pounds of cheese produced. That was below the trend estimates and below StoneX's estimates. However, when we have those numbers now, we can calculate a disappearance, and this is where the crux of the problem starts showing up. And again, there's a very fine balance between supply and demand here, and usually everybody in the dairy industry likes to talk about demand. They just do not like to talk about disappearance. But the disappearance numbers were 1.13 billion pounds, which was significantly lower than either the trend or the StoneX estimates. And this was a 31-day month, and so we should have seen actually quite a bit more disappearance. So what we can do is actually calculate the stocks, which is this number here, divided by the use, adjusted for days, and we find out that we have 39.5 days of excess cheese in inventory. So the dairy industry has been in contraction for 7 months, and we've lost about 132,000 cows. And again, that's seen as a really big deal, but I will continue to argue we never should have gotten that high in the first place. And so we look at kind of a regression of December. Yes, there are times we've had more cows. Of course, 2018 was not particularly a good year, and then there's times when we had fewer cows. One of the things that is always interesting to look at is how did cows change across the United States? And for you guys in Michigan, you added about 18,000 cows. And also Minnesota and Wisconsin and South Dakota all added significant cows. The cows that came up in Texas actually come out of New Mexico. And then everybody else basically lost cow numbers. So again, we're raising cow numbers where we're making cheese, and we're taking cow numbers away from where we have class 1, class 2, and class 4. Now the issue with the herd is it's really looking like it's going to begin expanding. This is some data from StoneX where they calculate a 4-week rolling total of slaughter numbers. And for the last 2 weeks, we've been running 7% below a year ago numbers. That tells me that we're going to start expanding. Now, there is a new report out that says heifer numbers expected to calve is down 2.7%. But again, heifer numbers being down doesn't necessarily become a big problem because there are several years in the past where we had lower heifer numbers, but yet the herd expanded. It seems to be more related to cow slaughter rates than anything else. When we're talking about cow numbers, I was trying to figure out exactly what was the impact on our milk per cow change. And again, you can see that across the last 7 years, we've just had a tremendous increase in milk per cow. I mean, you guys are just all doing a much better job. And in fact, you can say that we've had about 3.5 pound increase. And I did that by, drawing a line across the peaks and along the valleys, and it comes out about 3.5 pounds. So my question was, if you go back 7 years, and you see that production per cow, how many fewer cows do we need as a result of that? And it turns out it's about 500,000 cows. So if we had the production that we had in 2015, we would need 500,000 more cows. Or if we have the same cow numbers that we had in 2015, we're going to have significantly more milk because of this milk per cow. Now, if we look at disappearance across the same months, it's only growing at 2.03%. So in fact, we're producing cheese at a faster rate than it's being pulled away. And we come back and look at the production numbers. We're down in cheese production compared to kind of the average, but we're way down in disappearance. And so it's the disappearance number that makes me pretty bearish in the industry at the moment, not the production numbers. Again, we can look at the days of surplus cheese. Go back to 2015. I've drawn 2 lines. One is at day 40, which I consider kind of a critical upper level. Day 36, which is a critical lower level. And we're pushing 40 really hard here in December with 39.5. And if we bump above this number here in January, there's a good chance that cheese prices are going to have to drop. So twice a month we have a global dairy trade auction. This is where the international market pretty well sets its price. And so this is the second auction that was up. It was up about 4%. Again, there's problems in New Zealand with their production. They got some real shrinkage of the herds in Europe. But at the same time, it's been kind of bullish for prices. So what I wanted to do was kind of go through some of our spot market numbers and how we compare to the global market. And so here's the cheese market. The global dairy trade is $2.58, and that's generally blocks. Our blocks have been running $1.73 to $1.90 across these last 13-day trading days that I have here. So there are a couple of reasons that we can't meet the global dairy trade. One is we've got a very strong dollar. A very strong dollar is very negative for exporting. We still have significant supply chain logistics. We just can't get containers offshore. And then there's this whole issue of basis that you're always going to expect to be under a little bit just because you've got to transport it that far. Now, part of the problem right now is the spot market is just not active. In blocks, there was only one trade this last week. We went several days in barrels and only saw one trade and finally 4 on Friday. But I want you to think about one more thing that really gets lost in the whole discussion. And that is that on the global market, people want white cheese. And guess what we have in our 40-pound blocks that are traded on the spot market and in the National Dairy Sales Report? We have yellow cheese. So anytime you see a number on the National Dairy Sales Report, even though we may be selling cheese at a higher price on the global market, it doesn't transfer back to the National Dairy Sales Report except through removing cheese, which causes a downgrade in supply. So again, this to me is a major issue in the industry, and I think dairymen should start talking about it, that we have 40-pound colored blocks that we get paid on, but yet most of the global market is white cheese. If we look at butter, the global dairy trade is like $2.82. For a while, the spot market was clear up to $2.90. Everybody was quite excited about it, but then it finally came down last week. And right now, it's kind of hanging in that $2.50 range, and we did have 12 trades on the spot market. But that seems to be, again, about the right place, around 250, because this difference, again, is going to be influenced by basis, by strong US dollar. We're never going to see the world market consistently. Non-fat dry milk is kind of the same deal. We're $1.96 on the global market. I typically think about non-fat dry milk as somewhere between a 20-cent to a 15-cent basis. So if we take $1.96, take 20 cents off, that'd be $1.76, which is down here, or $1.81, which is up here. So non-fat dry milk is in that trading range at this point. So last month I gave you my estimates for December, and I thought your PPD would come in at $1.30. That's at the federal level, so that's going to be in Cleveland. Your individual prices are going to be 10 to 20 cents lower than this. And it came in at 99 cents, so I missed it by 31 cents. And so the reason I missed it is your fat component was higher. And anytime you have higher components, you're going to drive PPD down. And also you ended up with a lot more class 3 than I had projected, and that's because you were depooling class 4 and a few of those things. But it takes just a little change in components and in utilization to change that PPD. So we did have class components released this last week. And I think you guys are going to be very happy with your milk checks coming out here this next few weeks. Class 3 is 2038. That's up $2.02. Class 4 is 2309. That's up $3.21. That also means that your co-ops are going to be depooling again. Our butterfat price was up 66 cents to $2.96. The protein price was down 24 cents to $2.35, and other solids was up 7 cents to 52.5 cents. Now I thought you guys might be interested in what's actually driving milk prices at this point. So what I did is I took some historical numbers for whey, cheese, butter, and non-fat dry milk, and compared them to our January numbers and said, well, what impact is that having on our different classes? And it turns out that by going up about 35 cents in whey is adding $2.10 to the class 3 price. Now, cheese came up about 14 cents, and so it added $1.42. Again, a good number is 10 times the price of cheese. But here's the big thing. Non-fat dry milk is adding $6.44 to the class 4 price, and butter is adding $3.23 to the class 4 price. So basically, non-fat dry milk and whey are really driving the milk prices at this point. So with a big risk of being wrong, which whenever I estimate your PPD for this coming month, it's plus or minus 20, 30 cents because again, I can't, at this point, have a good handle on what utilizations will be and what that will end up with your different components. But I'm going to suggest that you're going to be somewhere around the $1.59 increase in PPD. So that should give you a statistical uniform price just about $22 in Cleveland. But more importantly, that's up $2.31. And so January is going to be a particularly good month for milk prices. And one of my concerns is the cure for high prices is high prices. So with these kind of jump up in milk prices, I think culling is going to come down, production is going to come up. And so here's your butterfat, protein, and other solids that will be on your check, and we've already talked about them. Now compare that $22 to where you've been in a statistical uniform price, for the last 2 years, and we're just going to be off the chart high. The highest that we'd had previously was basically $19, $19.66, and so this is going to be a very good month for farms in order 33. It's always interesting to see how the federal market changes from month to month, and so this is the December data. And across the nation, it was about a 72-cent increase in statistical uniform price. You guys had about 82 cents. There were some very good increases, any place that had high class 1, and then places like Wisconsin, Minnesota that depooled a huge amount of their class 4, or California saw much of a less increase. So again, order 33 saw about an 82-cent increase in uniform prices. So here is the class 3 utilization, just to give you a sense of what has happened over time. So again, your highest values have been right in here at 38. The fact we're up to 44 and change is because we're depooling class 4. Since I've got to add to 100, you take one away, some of the other ones have to go up. So a very high utilization of class 3 and a lot of depooling of class 4. Again, you can see that here, you're at 8.5%. Class 4, when historically you're going to be in this 20% range if you're not depooling class 4. So what's going to happen to your statistical uniform prices? You're probably going to see the peak here in about April, and then it's going to kind of come down, but this is going to be a phenomenal peak. And even out here, looking at 2093, so those are still pretty good prices compared to what we've been in the last 2 years. What the futures are telling us right now is that class 3 is going to come up and then kind of come down. This is driven by cheese, whey, and butter. Non-fat dry milk and butter are for class 4. So again, it's going to kind of head up. Probably April will be the peak and then come down. And I'm expecting these to begin to merge out here in the first quarter of 2023. So if we look at your fat prices, they've been very good. Again, fat is driven from butter, and $2.81 here for a little while, and it's going to kind of trickle down 260s and then down in the 240s. But anything over $2 in fat price, I consider to be extremely good. Protein prices are going to kind of come up here in a little while and then be over 3 and then kind of hover in that 3 range. Again, my benchmark for protein is if we can keep that in the $3 range, that's usually a pretty good price. Now there's something that I don't think I've shown you guys before, is when you actually calculate the protein price, that there's a discount for fat. And the reason is, fat price is driven by butter, and butter is 100% fat, so there's a 1-to-1 correlation. The problem is cheese has both fat and protein in it, so there's a discount for butterfat. And again, these are the calculations, but the bottom line is, as fat prices rise, protein prices decline. So that's part of the reason that we're going to see these protein prices go up, and it's not that cheese is going up, it's the fact that fat is coming down. So a couple of things I think dairymen ought to be keeping an eye on here, and this is the May soybean meal contract. Again, we had that chance to book it back here at 320, but ever since the first of the year, this thing has rocketed up, and we're up $45 a ton. I mean, compared to that late October number, we're up, $122. But this recent rise is 18 cents a cow a day, assuming you feed about 8 pounds of soybean meal or protein supplements. The other one that I think dairymen have to keep an eye on is this heating oil contract. Heating oil is a proxy for on-farm diesel, and again, we had a low back here in December around $2, and this has just rocketed up. We're at 276, and if we continue with a lot of this cold air that's been coming down, this probably has a little bit more upward movement to it. But on-farm diesel fuel for April is probably 70 cents higher than it would have been in December. I know that's a lot of information in a short amount of time, so if you have any questions, feel free to email me at this ljones@farm.com or send me a text at that phone number. And I hope you find some of this information useful. And again, I'd like to thank Nobis Agri Science for sponsoring this. And I will talk to you again next month.